Hi, everybody. Guess what time it is? It's Just a Minute with Dave and Emily.
I'm Dave.
I'm Emily,
That's
and
Emily.
we have a special guest
Who's this
today. This is Joe Long.
Hi,
Hi,
everybody.
Joe. Joe's from Guild Mortgage here in the Madison area. Their team does fabulous work, and we are here today to feature Guild Mortgage and Joe Long, and also find out some things about you.
At the Madison Capitol.
At the Madison Capitol,
So-
of course, on location. So,
Yeah,
Dave,
that's right. So everybody's probably talking about in your world, interest rates. Oh my God, the interest rates are going up. They're going all crazy. How does it, the Fed just raise interest rates again?
They
How does
did.
that affect the mortgage market? Blah, 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 blah. And we were talking about it. We're like, we don't know.
we don't know.
just
We're
real estate
realtors.
agents. We don't know.
Well,
And we
that's
were
why
like,
we
we
brought in
know
a
a guy.
lender.
And we got this guy to answer some questions for us. So I wrote down some questions. Can I ask them?
Please, Dave, shoot.
So we hear a lot about what the Fed does things, right?
Yeah.
So Joel, first thing, when the Fed raises a rate, what are they raising?
The Fed is raising the overnight funds rate. So what they're trying to do is
Okay.
increase the cost that large banks can borrow at.
Sure.
Okay? So what that does is increases the cost that little banks borrow at, which increases the cost that we all borrow at for our credit
Got it.
cards and our car loans and things like that.
Got it.
It makes it more expensive to borrow, which slows down inflation. So what the Fed
Got
is
it.
trying to do is slow down inflation, and that's the tool they have to do it with.
So Joe,
Oh,
so
wow. Thank
when-
you. I did not know any of
There
that.
you go. When they do that, how does that affect the mortgage interest rates?
That's a great question, and usually there's actually an inverse when that happens. So
interesting.
inflation is the enemy of bonds, right? And mortgages are based off of bonds, and so when inflation is going up, mortgage rates are going up.
Sure.
So if the Fed is able to successfully bring inflation in check, what's going to happen is theoretically mortgage rates could potentially go down. Now,
Oh, and this is good
it's a good thing.
for us little guys trying to borrow
Woohoo!
from you.
That's right, and
Or not you.
it's not necessarily like an immediate thing,
Sure.
right? Because inflation's not in check yet, right? It's still been going up with
Sure.
every report that comes out. But once they achieve that goal, then theoretically they'll stop raising that funds rate because inflation will be leveled out or going down, and then you'll see good things happen.
Can I sneak a question in here
Sure
quick?
can.
So, and this is just like kind of a more layman question, and you're giving us such great information. Do we need to be, people are like, oh my God, it's going up so fast. Do we need to be scared right now? Like, should people be freaking out and like just stopping their activity in terms of being interested in home buying or selling?
Yeah, that's a great question. I get asked that question like 10 times a day.
Yeah, I
probably.
figure. So do we. We don't have an answer. And that's
Yeah,
why
right.
we're here.
Yeah, so really, probably not.
Okay,
honestly.
great. And I know you can't guarantee anything, and that's
Sure.
fair. But
Yeah, really, rates would need to get into probably the 7 or 8% range before we were to see a decline in values, or before. And a lot of people think that's going to happen, but if the Fed reins in inflation soon, and it looks like they're gonna, theoretically rates will not get that high.
Sure.
And we shouldn't see a value correction. So
awesome. That's good news.
That's great.
Thank
So
you.
for some people, this is actually a good opportunity right now,
Yeah.
because rates will come back down eventually. But with less competition because of the higher rates, you might be able to get a house right now when you couldn't get one 6 months
And
ago.
we have seen a little bit of slowing happen, not a ton yet.
Yeah,
but-
which has to do with other factors that we all talk about all the time in our business. So.
Right. So then I want to ask you one other question. So how do the current rates, and they're higher than they were 4 months ago by a significant amount, but how do they compare historically to mortgage rates?
That's another great question. So they're about on par with historic interest rates.
Sure.
So pre-2020, the historical average of interest rates over time was about 6.25. If you include 2020 and 2021, it's in the 5s, and right now rates are in the high 5s.
Okay.
So we're at
We're right at where we've been for.
So people freaking out because this is their first round of seeing things change. People feeling like, oh my God, they're so high. Really, they're not. This is regular. They're just historically low. I remember
super low. Before.
my parents were talking about their first home. It was at 13%. So I mean, not that we're ever wanting to
Bought
go
my
there.
first house in 2000. I think we got a 5.25% interest rate, and we were like, "Oh my God, we gotta buy right now."
Yeah.
Yeah,
Never
ours
gonna
was
be this low
7,
again.
and we were amazed by that. That was great too. So,
Yeah.
basic like takeaway here is that people shouldn't be freaking out. People shouldn't stop their activity or their desire or love of the idea of buying a home or selling a home
Exactly.
and making a move. That's what we want to take away, right?
Correct.
Awesome.
It might cost a little bit more now, but there's an opportunity to refinance later,
Yeah.
and there's no decline in values in sight. So if you want to own a home, don't wait and see what happens. Buy it now, and then if you can save money later, save money later.
Exactly.
Awesome.
And we know who to talk to about that. Mr. Joe Long, thank you
Dr.
for
Joe.
joining us. Just a minute with Dave and Emily, Guild Mortgage. Joe Long is here with us. He can answer many more questions. You're going to see him again, I bet, in one of our videos. Thank you for taking extra minutes with Dave and Emily. In Just a Minute with Dave and Emily and Joe.
See you next time.
Bye.
See ya.